Hi, everyone. Mike White here. Welcome to this week's vlog post. It's been another amazing week. I know the volatility and the decline in the bond market has been really something incredible to bear. And I know there's lots of questions and people trying to find out what's going on. And to be honest with you, it's frustrating to me as well, because I just wish the Fed would sit down and shut up and do whatever it is they're going to do, but they really need to just stop shooting their mouths off, because the more they talk, the more the markets try to step back and figure out what these people are thinking. And it's been more than a year of the Fed really having gotten fiscal policy completely wrong, making up stories and gyrations about the economy. The Fed members want to get out there and get in front of a microphone and share their opinions and make speeches on how they're going to fix the very problem that they themselves created by not paying attention to what was going on in the market, and as if the trillions and trillions and trillions of dollars that were being pumped into the economy we're going to do anything else other than create massive inflation. It almost boggles the mind to step back and think that these people are supposed to be the best and the brightest financial people, in the country. And Economics 101 could have told you that all of that spending and all of that borrowing and everything was going to lead to exactly to where we are. So, we're here now, and this wild movement probably isn't going to stop until the markets actually figure out, they translate Fed speak into Fed action. It was just, a couple of weeks ago, the Fed was buying 30 billion in mortgage-backed securities, and now all of a sudden they got to dump, everything off the balance sheet, and it remains to be seen how they go about doing that. But it can panic the markets, and you're seeing that in the rapid, increase in interest rates. So, the position that we've taken all along, if you like it, lock it, because we don't know where things are going to go, and that it's important that we focus with our customers and our referral partners about payments. And while we can't control the price of houses, and while we can't control the interest rates, there are things that we can control. There are things that we can be doing. There are things that we can coach our people to do to help them manage those payments and understand that we can get them into a house at a payment that they're comfortable with. And it's important that they understand all the pieces of the puzzle. And we've talked about that quite a bit here, about what we can control, and understand that first and foremost, everybody's really got to drill down on the credit issue. And we've talked about that a lot. Credit is the root cost of money. It impacts the cost of PMI if necessary. It hits the insurance piece of the puzzle. It impacts all borrowing. So when we're dealing with customers, not only on their monthly mortgage payment, it's also their total debt to income ratios and where that puts them as they manage their overall indebtedness. And again, improving a credit score can lower the cost of borrowing across the board. When we lower the cost of borrowing across the board, it means we can borrow more money at the same payment. And that's why it's important to remember what I shared when Experian came out with in February, that the average credit score in the United States today is 714. We don't share that news enough with people. People with 621 credit scores now think their credit's good, and it's, we're going to go get a house, but they don't understand the implications of that low credit score. The fact that we all know that 621 is, one sneeze away from denial. And now that the average score is 714, those people are just average now, the 714 borrowers. And it's 750 or 775, which is above average. And now we're back to where we've talked about 800 excellence. That's really, what we need to put in people's minds. And there's no reason that while people are putting themselves together to look to buy a house, that we as professionals are not working on looking at that credit and understanding where they sit and showing them a path to improve those credit scores, and understand that the debt to income ratio, total indebtedness, it becomes really important to understand how that credit impacts, again, not only the interest rate on their loan, but their PMI premiums, as well as their homeowners insurance, all of those things, as well as their other debt, their car loans, their credit cards. Credit is a very big deal, and we don't spend enough time explaining that. The next piece of the puzzle is cash. And, while it may be taking weeks and months for people to go out and find the house that they love and are willing to make an offer on and get that offer accepted, many people are wasting that time by not understanding that what they can be doing to bank cash. I've got a target right down the block for me that starts at $15 an hour. And if you commit to 20 hours a week at part-time, they're paying $24 an hour. So people who are thinking about buying a house, if you've got a couple, why are they not finding those part-time jobs and making that money and banking $1,000, $2,000, $3,000 a month, so that cash can be used either to reduce indebtedness, to pay off or pay down a car payment, to pay off things that are troublesome, that are impacting their whether it be maybe judgments or medical debt or any type of other obligations where there's a significant payment attached. You look at $300 and $400 and $500 car loans, and you start saying to yourself, well, what does that translate into when it comes to monthly payment for a mortgage? And how does that help me? Or if I remove that car payment, if I don't have that car payment anymore and don't run out to get another car, that my increased housing payment because of higher rates is less impactful to my day-to-day living. The other thing is cash helps with our down payment. It helps bridge the gap if you have to offer more for a house than you're looking to borrow. It helps take into consideration, maybe instead of MI, a single pay premium. Again, combined with credit, we're reducing all those costs. People don't understand the value of those few $1,000s here and there. And again, when we look at people, especially as we go into the spring and the summer and people are looking to move out of their houses and look at first-time rentals, the shock of what rental units are right now. First and last month's rent and a security deposit can be a substantial amount of money. And in some cases, looking at your own market, you may be able to combine that and say, you know what, maybe spending a few months saving and earning more money, instead of putting money down for an apartment, let's go out and buy that house, because that's important. That's really important. And again, remember, these pieces of the puzzle can all be put together by an expert. They're not going to get that with an online company. They're not going to get somebody to help them navigate this who spent the last 2 years of their lives pounding refinances. People who are in the purchase arena understand purchase transactions. They understand that offers get accepted because of the quality of the pre-approval. They understand that offers get accepted on speed. How quickly can we close? Those are the things that you bring to the table. Those are the strategies that you need to employ, because while we wait and see what the Fed's going to do and how it's going to impact the markets, we have to deal with the things that we can control, the strategies that we can do to make payments work for our clients. And until then, we can just hope against hope that the Fed just shuts the hell up and do what they're going to do and set out the plan that they're going to set out, so that we can deal with whatever the ramifications are going to be. Because right now, all the jibber jabber, all the talk Nobody's buying it, and people are overreacting to it. And as a result, we're all feeling some challenges trying to explain why, again, the most financially savvy people in the country can't figure out what their plan's going to be, and how to deal with it on a reasonable basis. So as always, questions and comments, it's Mike at imtcoaching.com. We'll talk to you again real soon. Take care.